Think you need millions to start earning passive income in real estate? Think again. Real estate isn't just for big players. Everyday investors are building wealth and generating passive income, often starting small. In this video, Paul and I are going to show you the strategies small investors use to create steady, hands-off income through real estate. So Paul, let's start off with what is passive income in real estate?
The most common form of passive income in real estate is a rental property. Single family, multi-unit, whatever you have there. Let's say you're earning $300 per door above and beyond what your mortgage, taxes, insurance payment is in rent. Let's say that your mortgage is $1,500, your rent is $1,900. That spread right there is your passive income of what you're earning there, that extra $400 per month.
Yeah, and then just to add to that, why real estate is ideal for this too is, right, it's a tangible asset and it's going to most likely value is going to appreciate over time. There might be some market fluctuations in certain markets, but on average, and then there's multiple kind of income streams baked in, from rent to the tax benefits to the appreciation. So those are some extra features on why it's good for passive income. So
Tax
Paul,
advantage.
what are some ways? What was that? Go ahead.
Tax advantage for sure, right? Passive income is the most
Yeah.
tax advantaged form of income in real estate.
Yeah. So let's talk about now some ways small investors can generate passive income. You already touched on the rental properties, but there's a few others that I want to highlight. You know, one of them, I'll start off with this one. One of them's house hacking, right? This is essentially, this buzzword came probably 10 years ago. It's basically when someone lives in either, like, they have a single family house and they own it, but they might have two or three roommates where they share a property with. Or you have a small multifamily, like 2 to 4 unit property where you live in one of their units and then rent out the other, 1 to 4 or 1 to 3 units, essentially. These kind of strategies really help offset your living expenses, and someone else is helping you build equity along the way. So that's another great way to get started, especially young, when you don't maybe have a family yet and it's just you by yourself, to get in the game, get cheap financing like an FHA loan on it, and build wealth that way. Another example, Paul, that's kind of been hot the last, call it 5 to 10 years, are short-term rentals. And I know you got a bunch, so you want to talk about them a little bit?
Yeah, the short-term rentals, which have been all the rage going up into the pandemic and everything. You buy a property, say it's in the Smoky Mountains in Tennessee or North Carolina, renovate it, rent it out, and you're renting it by either the day, the weekend, the week. Even in some cases, you can rent it out by the month, depending on location, right? Some people do longer term, like here where I am right now in New Jersey. People typically rent these houses by the month. They'll rent for the month of June or July or August. Tremendous cash flow during those months, right? Your down months obviously would be the winter months where nobody wants to be there. But that's great house hacking right there, where you can get some really good extra income, higher than normal, than just a regular standard traditional rental, where you're going to get the same, tenant for all 12 months and same lower income, right, than you're typically going to get off these short-term rentals for sure.
Yeah. Other things that kind of cropped up over the last, call it 10 years, are real estate crowdfunding sites, I should say. These basically, someone could invest small amounts in essentially like a large apartment building through platforms like Fundrise and Realty Mogul out there. So those are kind of like another way where you're not directly operating. You're almost like a limited partner, essentially, in a syndication on a larger real estate project. I haven't personally done them through those platforms, so I can't really speak to them, but I know, people out there that have done that. And then another one, people, these are publicly traded. Some of them are real estate investment trust or REITs out there, right? You could buy a share in a REIT, which then will pull all this investor money together, and the operator is gonna use that money to acquire and manage income producing properties. Again, more likely in the commercial game. However, build to rent has been very popular the last 5-10 years as well. So a lot of activity in that marketplace as well.
For sure.
Anything to add there, Paul, on, other ways people could generate passive income? I guess the other one really is like your own private credit, or you could be a private lender as well on a smaller deal.
That's probably the best, right? Being a private lender. We've done this, Mike, in the past over the years, where we have been the bank essentially lending out to other investors or selling our properties with owner financing. We've done quite a few of them. We did one in Shenango Forks years ago in New York, where we got a substantial amount down, which is pretty much most of the money we had into the property. Then we collected the balance over a 36-month period. Great way to do it. And, you're not getting it all in 1 year. So your tax advantage a little bit more here than you are with a traditional, just flip. Where you're going to get hit a lot.
Yeah, with the note game, right? The tagline there is cash flow without the toilets and tenants, essentially.
Yes, exactly. Yeah, great way to do it. And we always look to do those.
Yeah. So let's shift gears and talk about some of the benefits of passive real estate investing. One I see is steady cash flow, right? You're going to receive some regular income through rents or dividends or paying back a note like we just talked about. You got appreciation. So over time, if you own a property, typically increases in value. You got tax advantages. You got depreciation, mortgage interest deduction. You could sell through a 1031 exchange on a property and buy another one within 180 days and not have to pay capital gains taxes. There's leverage, right? Other people's money via loans or partnerships to maximize your returns. You could put less in a deal essentially. Anything I missed there? Or anything you want to add on the benefits of passive real estate investing?
Yeah, let's talk about the most recent tax law that just went effect that brought back the old 2017 advantages, the cost segregation analysis. So for example, if you have a property that you picked up as a rental, you paid 150 and you put $75,000 into this property, redid new roof, siding, windows, doors, kitchens, bathrooms, just renovated everything, you can write off a tremendous percentage of that in year one, year two, and year three to really reduce all your income. And think about it, if you're a major flipper, somebody who's fixing and flipping or doing wholesale deals, it's a way to offset that income, right? Because now you got more losses, not more losses, but you got more ability to have more income and offset that income coming in. So it's a super powerful tool used by the rich. And it's something you want to do because you don't want to just be flipping because that's highly taxed, right? You want to have rental properties and you want to have rental properties where you can do the cost segregation analysis, take advantage of that things in the tax law too, right? If you're investing in certain markets where there's, I forget the name of the term that they use, you might remember, where say an inner city where it's not a normal area where they were trying to get more money to invest in there.
Opportunity zones.
Opportunity zones, right? So again, you can get great tax advantages, commercial property in opportunity zones right there. And you can invest your funds in the companies that are investing in opportunity zones and get those tax benefits as well.
Yeah. All right. So that's the benefits and all great ones, right? And now, what are some of the challenges and how can we overcome these challenges with regards to passive investing in real estate? And I'll spit off a few off the top of my head. Feel free to add more to it or clarify. But I'm thinking, right, there's an initial investment someone's going to have. You got to have something, right? Start small. Maybe like a strategy like house hacking. You only need 3.5% down on an FHA loan or some kind of REIT maybe for someone and they can invest in a share. There's market risks, right? So you got to research local markets. You might want to diversify some of your investments to mitigate some of that risk. There's tenant management. If you actually own them, operate the properties, got to know how to do property management. Who's going to do the repairs? You or find someone else who's going to actually manage the tenants, getting them in and out. And then obviously there's like with everything in life, there's a learning curve, right? So you got to educate yourself with books, courses, YouTube University like this. Before diving into it. However, some people get to that analysis paralysis stage and actually never do anything. So you gotta find a fine line where you have enough information, then do something and continue to learn. Any other challenges to add to that, or you think that kind of covers everything?
I think you really hit on everything there, with the biggest challenge being the property management side of things, right? That's the one I think a lot of people struggle with. And if you try to tackle that yourself, that can be a really difficult one. We recommend anybody, especially if they're investing outside the area, to find a good outside property management company to handle it. Typically, the best ones are your smaller mom and pop companies out there, not the big ones that manage hundreds or thousands of units, but some small one that's maybe managing 20 or 30 different units. And you're generally going to get more hand holding. You're going to get better response from them and better, their customers, basically your tenants, are going to be taken care of better.
Yeah. So if you're like a newer or thinking about getting into real estate, I'm just going to give like a few examples because we kind of cover a lot, me and Paul just here now. So if, one option for someone is just house hacking, we talked about earlier. If you're a young couple or single, buy a duplex or triplex or a quad and live in one of the units and rent out the others. You only need 3.5% down for an FHA if you never owned a home before. So that's one example. If you're busy, high net worth professional making good money and you have the money, but you don't have the time or desire to manage those tenants and property management that Paul just mentioned, private lending or private credit could be a great option. You find a good real estate investor through local meetups, track record, and maybe connect with some other local hard money lenders to kind of learn what they do too. Just network and educate yourself. And it's a good opportunity to invest in a few properties, maybe help someone with the acquisition. Here's $75,000. I get 0 to 1 points, 10 to 12% interest rate on a property. on a short-term note, and then when they flip it, you get your principal and interest back. Private credit is another easy way to get in from a passive perspective. Any other recommendations, Paul, for someone new, just so they could take action from this video?
Yeah, absolutely. So, I mean, I think the private lending one, if you have that capital, and
Yeah.
Mike and I like to be private lenders as well because it just reduces your risk. You're now the bank. Yeah, there is risk that something could go wrong there, but it's very low in comparison to if you're the one managing and doing everything, right? It's more simple. No tenants, no toilets, no nothing. So, private lender is a great way to do it. If you're new and just want to get started in there, definitely find somebody like that you could be your money partner, and you could be the one trying to find all these deals out there and let them fund everything, and it should be a well-oiled machine.
Yeah. So there's some quick tips to get started. Start small, educate yourself, network with other investors, and just have a long-term mindset and know what your goals are. And from rentals to crowdfunding, small investors are finding creative ways to generate passive income in real estate. And if you enjoy this video, like, subscribe, share your passive income goals in the comments below. We're happy to comment, answer any questions you have, and have a great day.